Hello, this is our weekly email for the week ended February 26, 2021. And so this week has been characterized by amazing volatility. We had huge up days, huge down days, a lot of volatility. And what's driving all of that? Well, in our view, what's driving it is what's called in the markets by investors a rollover from one area to another. So where we've been so far is in the at-home trade, right? So in other words, the companies and the stocks that were doing really well were Amazon and Netflix and all those big technology companies. Why? Because people were staying at home and using their services and their products, and so their stocks were driving and pulling the stock market up with it. What's happening now is people are starting to say, well, with the pandemic starting to look like it's coming to some sort of an end with vaccines and with potential herd immunity, that people are going to start going back outside. They're going to start going back to restaurants and traveling and movies and all of those kind of things and not using all that technology as much. So what's happening is you're seeing that rollover out of technology and into the other places. So the transition from one darling of Wall Street, if you will, to the other is usually messy. And there's a lot of volatility as that is happening. And that's what we've seen over the last, I'll say, 10 days. However, what does it mean? Well, it means that the market is reacting to what we've been saying over the last several weeks. And that is that with the stimulus, with the vaccine, with the pent-up consumer demand, haven't been spending for a year, with the incredible amounts of money that have accumulated in cash and people because they're not spending as much. Savings is at the highest rate in the history of our country right now, the savings rate. So all of those we think is going to combine to create a very rapid rise in economic recovery and therefore a very rapid rise in the stock market. We're diversified, so yes, we have technology, but yes, we also have the things that are being rolled over into. We don't try to pick which sector or whatever is going to do well because that is very difficult to do. And in most cases, when people do that, they end up being wrong. Studies have shown that. So our diversification should help us. The big picture is that the new drivers of the stock market will probably be the outside companies as opposed to the locked inside. Now, another dynamic that's happening right now that's very interesting is that because of the idea that we're going to see a rapid expansion, there's a concern that interest rates are going to go up, and that's going to cause dislocation and those kind of things. So the Federal Reserve Chairman Powell on Thursday came out and said, don't worry about it. He basically said, we are not going to raise interest rates even if the economy is doing really well, because we would rather stay in a stimulation mode longer than we should than to take it away, find out we took it away too soon and have to bring it back, which will be very, very disruptive. So they have committed, and so there's no reason to disbelieve them, that they are going to stay the course longer than necessary. So there'll be more stimulus in the system than is necessary for longer, just to be sure that we are past all of this. So what is the Fed saying? The economy is going to grow. It's going to be fast. The stock market probably will go up. The economy will drive profits. And so they're saying exactly the same thing as we were just saying. So the big picture is we are still optimistic about where we go from here in terms of our investments. But there are countervailing winds, higher taxes potentially, inflation potentially. We could be in a bubble. We don't know until it pops that we were in it in most cases. So all of those things could be problematic, which is why we have our invest and protect strategy ready to be implemented should the worst happen and we need to get out and protect you. We are far from that right now. We have a comfortable margin from where we would be selling, so we can adapt to this volatility, and that's on purpose. So let us worry about all this so that you don't have to. We hope that you are staying healthy and sane, and that soon you'll be able to go out and do all the stuff that you've been unable to. And I hope you are feeling peace of mind knowing that we're managing all through this for you. Okay, so thanks once again, and we will talk soon.